Hi everyone and welcome to Property Insight. I'm Neil Harding.
I'm Mark Ashworth.
Today we're going to talk about stress tests and how they're applied to mortgage products. So when you're applying for a buy-to-let, single-let mortgage product, how does a bank decide whether or not it's suitable and appropriate to lend you a certain amount of money? Could you describe for us the difference between, say, stress tests that are applied on a main residential mortgage, first of all, versus how that's applied to buy-to-let, single-lets?
I would caveat all of this with speak to your broker. As we always say, when you're dealing with mortgages, try not just to find out the information online. Have a chat with a trusted mortgage broker, particularly around the type of product that you're trying to engage yourself in. So if that's your own residential property, then you can use by all means a residential mortgage broker. And more importantly, if it's a buy-to-let or investment property you're buying to mortgage, then make sure that you speak to somebody who has good experience of that particular market. So residential stress testing is where they basically use solely your income, so your salary. They work out a calculation to decide its affordability, and that's usually based on your main salary, and also if you're taking it with a partner, it will include their salary too. I think it's typically 5 times the salary on a lot of the residential, and so that's what they'll base it on. And I guess that's gross salary rather than take home. And then that will indicate what they feel is affordable for you at that time. And you'll obviously need to back that up with pay slips and a record of your income going into your bank account. So it could be bank statements too. Buy-to-let, on the other hand, is a little bit different. Some lenders will insist that you are earning some kind of salary. Not all, but some do. And then they will base their calculations on the value of the rent that's being paid to you against what the mortgage rate is. And that's normally around about 125% of the rent. So you calculate 125% of the rental income, and then as long as the mortgage meets that, the mortgage repayments are covered by that rental income, then they'll be happy to lend on that basis. Again, all banks are different, and it's a question that you definitely need to ask the broker, particularly when you already know what the rent is going to be, or perhaps you're buying with a tenant in situ, or perhaps you're remortgaging a property that you're already renting out. It's important to know that you are actually charging the correct amount of rent for that property. So if it is under market value, then it might be a good time to bring it to the market value if you are remortgaging.
And I think it's important as well that everyone remembers that, of course, banks have a regulatory requirement to lend responsibly.
Unlike 2005, 2006.
Well, yeah, yeah. So I think it's the Prudential Regulatory Authority that outlines some of the guidelines that banks and lenders need to be following. Effectively, it basically says in a nutshell, I would say that, lend responsibly. And that's why they're doing these stress tests. So it's not just to make people's lives difficult and prevent them from being an investor. The bank, of course, wants to make sure they get their monthly payments and they don't want someone to go into financial difficulty any more than we as investors do. But that starts with doing a stress test. Whatever you do, as Mark said, speak to a mortgage broker, because they're going to help you figure out as well what's a good mortgage product for you and what is affordable for you. And the stress tests, so you mentioned 125% there, Mark, and I think one of the things that the Prudential Regulatory Authority outlines is that lenders should take into account a person's income tax situation. So sometimes when you're applying for a mortgage, that can mean that they're asking for things like income tax returns and various pieces of information to support their assessment of your financial position. Bizarrely, it can also mean that 125% used for rental cover over the mortgage interest can be as high as 145% if you're a higher rate taxpayer, and sometimes even more than that, which is quite strange because it's sort of counterintuitive. You would think that if you're a higher rate taxpayer, you have more income, you can perhaps afford more, so therefore the stress test should be relaxed, and yet they're not. They go the other way. But nevertheless, that's
banks for you.
Yeah.
Sometimes the banks will want to stress test over the actual amount that is being charged as interest. So let's say, for example, you found a product at 6%. They'll actually calculate the stress test based at 8%. They might add in a couple of extra percent just to cover themselves if interest rates, or, well, I say if, when, if interest rates go up, in order just to protect themselves. Because if you take out a variable product, for example, or a discounted product, and then that interest rate increases by up to 1 or 2% within that period, then obviously they want to make sure that there's still good cover on that. So they might actually increase the mortgage interest rate and then base the stress test on that rate. So that's also something to look out for.
Yeah, and I've seen that with mortgages that I've been looking at and considering applying for, particularly on 2-year fixed mortgage products. I've seen that. And also it's worth mentioning that with 5-year fixed rate mortgage products, it tends to be that 6% plus 2% to apply your stress test to, that tends to be less common. And I think the reason for that on a 5-year deal is because with that longevity, there's probably more certainty of affordability. So, if it's affordable over a 5-year period with rents likely to be increasing over that period of time, I think that removes some of the risk and uncertainty for lenders because there's a longer period of time that they're dealing with. So I think, sometimes the stress tests are a little bit easier to meet on a 5-year versus a 2-year product.
Does it affect the ability to borrow? Does it affect the ability to actually take a mortgage out? What are the implications of the stress test once that's been done?
The stress tests don't make the mortgage more expensive. The impact that they can have really is that you might not be able to borrow as much as you were hoping for. That might mean that you either can't take an increase on your loan balance to the extent that you were hoping for. It might also mean that you need to pay off some of the capital balance on the mortgage balance in order to remortgage onto the interest rate that you want. So that can be the impact, but it's not in itself something that's going to make the mortgage product more expensive for you.
So if it was your first time property and your stress testing was making it a bit more tricky for the banks to lend you that money, you might say, well, I'll put in a 30% deposit rather than 25%, so you'd only be borrowing 70% of the value of the property, right?
Absolutely.
Yeah, okay, fair enough.
Yeah.
Obviously, the banks want to do their own stress testing. That makes total sense. I guess we should probably have a look at our own accounts and our own finances to see whether or not it's something that we want to afford.
I completely agree. Yeah, I think almost regardless of what the bank is saying is acceptable to them according to their criteria, it's absolutely essential that you've done your own financial assessment of what you believe is affordable. So, always consider what other sources of income you have, how much savings you have in your bank account, how much, if it's an application for a mortgage in a limited company, what's the health of the balance sheet, how much cash has the company got on its balance sheet. All of those things. Would you still be able to afford the mortgage if you didn't have a tenant? Would you still be able to afford the mortgage if you didn't have a tenant for 6 months, or if you lost your job? Even if the bank is saying, well, in our view, it's fine to lend you this money because the rent is 125% of the monthly payment, still think about those scenarios, because I think in all cases, it's a dreadful situation to be in when you can't afford to pay the monthly mortgage.
Yeah, so you basically have to work out whether you can afford to pay that if you don't have a tenant in situ.
Yep.
In this day and age right now, in 2023, it's highly unlikely because the rental market is on its knees with a supply issue. There is across the whole country, I believe that there is a distinct lack of supply. So as long as your property is in good order, you shouldn't really ever have an issue with renting it, certainly. But one thing that you may have an issue with is your tenant paying that rent. So if they default for any reason, you need to still be able to afford to pay it. So
I think maybe as a tip to would-be investors out there, stress tests are sometimes a reason why you're not able to get the mortgage to the level that you are hoping for. So if you're about to buy a property for the first time, and let's say you have 25% deposit on a £100,000 purchase price, you might have £25,000 there in the bank, and you're thinking fairly reasonably that that's enough money to go ahead and buy your first investment property. It could be that for reasons that you weren't expecting, you apply for that mortgage and you don't meet the stress tests applied by the lender, in which case then the deal might fall through if you can't find a different way to finance that purchase. So I would recommend as Mark said earlier, speak to a mortgage broker and even get a decision in principle. We've talked about that on other content we've recorded, but get a decision in principle on a mortgage, and that's a good indicator then of whether or not stress tests are going to be met.
Yeah, so they will typically look at your current financial situation and they'll be able to tell you whether or not banks would see you as a good bet in terms of lending. So even before you buy anything, or even if you may even have a property right now which is unencumbered. Perhaps we speak to people who have inherited a property, let's say, and they want to go along and purchase another one, and it may be their first time using a mortgage. So these factors are really important when you're lending to actually do the deal. So I think that about wraps this up for details about stress testing that mortgage product. So thanks ever so much for listening. I really hope that you've found it insightful, and we look forward to seeing you on the next one.
Thank you.